Hello, my friends. It's the Crypto Lunatic live from the Lunar Café. And today we're bringing you a market update. And what we want to know, are we in a bear market? Are we in a bull market? Is this a bull market retrace? Is it a bear market? Because most people seem to think we're in a bear market and doom and gloom is in the air. So this is like anything. This is not financial advice. This is simply my opinion. Well, it's actually not my opinion. I'm taking myself and emotions out of it, and I'm going to ask four separate AI engines what they think. Because at times of high emotion, it's good to get a balanced view. Now, whilst AI is still evolving, and it certainly is not an all size, one size fits all solution to all of this, we can look at it and get a balanced view of where it thinks we are. So I've asked it today simply for AI engines, are we in a bull market, retrace, or is this a bear market? And give us a percentage. So we've asked them to simplify it. So with that in mind, my friends, join me on a little journey of where we're at. So firstly, let's look at the current prices, and we see that Bitcoin's round about the $91,000 mark. So, where does this lead? Where are we going? Where are we heading towards, my friends? Where are we heading towards? So, first on the mark, we ask Grok. So, there's the question. Please analyze all the data and sentiment for the crypto market. What are the cases for both bull and bear market? And give us a percentage likelihood of both. So, here's the prices. So Bitcoin settled at 90 to 92,000 range after dipping below 90,000 earlier this week, whilst Ethereum holds above 3,000. Despite broader altcoin underperformance, the market's modest rebound today follows days of notable drops given by cooling Fed rate cuts, expectations of persistent ETF outflows, and a record 523 million from BlackRock's flagship Bitcoin ETF. So, BlackRock, blame BlackRock, my friends. They are doing it again. They're rinsing retail. BlackRock rinses a retail. Now, why would they want to do that? So you can read through all of this. There's a lot of data coming out of these, but really what we're looking is that we've got polarized opinions at the moment. So people are sitting on the fence. There's a lot of fear in the market. The bull market setup cases. So here we go. So there's a macro liquidity surge. We've got a technical bottom formation on the 50 and 200-day moving averages. So there's on-chain resilience. So stablecoin supply at an all-time high indicates building buy pressure. And the spot CVD is stabilizing and altcoin rotation. So there's early signs of an alt season. So that's the bull case. The bear case, we've got technical breakdowns. BTC's weekly bear divergence and a potential a death cross, my friends. Look, it's death, death. So obviously you hear the word death cross and everyone runs for the hills, runs for it. Institutional exodus. So we've seen this big outpouring of ETFs. I've done a video on this. I've got my own opinion on it. Sentiment and risk of spillover. So here we go. Retail FUD at extremes. So retail is absolutely at the end. They're in mass panic right now and cycle exhaustion. So there's no true bull catalyst left. So the likelihood assessment based on the data that it's a 70% likelihood to be a bull market setup resuming and a 30% to be a bear market setup. So that is Grok. Now, I want to say with Grok, Grok has access to all of the Twitter sentiment, which is all of the big voices in crypto. Not that that counts for much, but it does have generally a bigger pool of information to draw from. ChatGPT, same question. Here we go. Here we go. So we've got all of the same things, macro and liquidity landscape. So there's macro uncertainty. While earlier in 2025, there was optimism about rate cuts, some Fed officials are now more cautious, signaling the further easing may come soon. Treasury yields elevated again. On the other hand, liquidity isn't completely dried up, according to Optima. So, institutional angles, we've got ETF flows we've talked about, market sentiment and technicals we've talked about, regulatory risks. This is always present, my friends. and adoption and long-term use. So let's look at this. Bull case key drivers, which will likely be the same. Macro easing renewed, institutional inflows. Now, this is not particularly right, which is why we've got to take AI with a pinch of salt. Continued ETF inflows. This is simply just not true. So this is telling me that ChatGPT's information is not up to date. And this is really important, my friends. Anyone that's using AI and using their information as verbatim is on a loser here. Because to have no information and to just lean on AI, you've got to understand a little bit. You can't be a complete idiot and use AI. You have to understand that some information is clearly not up to date, and this really isn't. So, especially into a spot Bitcoin or ETF would provide a strong underpinning. Okay, so it would. It's not saying it does. So long-term institutional adoption, corporate treasuries, endowments could grow. Could grow. That's the important part. Market reset, sentiment repricing, regulatory tailwinds, yes, always there. Longer term adoption and innovation. The bear case, key risks, sticky rates and hawkish Fed, profit taking and institutional exit, regulatory shock, sentiment deterioration and technical breakdown, and liquidity mispricing. So, according to ChatGPT, the mid-bull recovery is a 45% chance. The sideways, now it's added this, the 35% that it's just going to go sideways. And the bear market, a deeper correction is a 20%. So there's the rationale if you want to read through it. And here's a sentiment analysis. Key catalysts to watch: the Fed, central bank communications, ETF flows, which we always look at, macro data, of course, with tariff shocks. Trump could do another one. On-chain metrics, which we always look at, regulatory developments and geopolitical risks. So here we go. A few caveats as well with ChatGPT. Let's go to Perplexity. So we're going to get all the same information now. Data, sentiment, overview, bull case is very much the same. Bear case, very much the same. Now, with Perplexity, look, the likelihood estimates. So this one is a bit more bearish. This is saying bull market 30 to 40%, bear market 60 to 70%, which is why we want to get alternative perspectives, my friends. So all different AI engines are coming at it from a different angle. And here's Deepseek. Now, Deepseek, it's got all sorts of information here, which we can go through. They talk about the same sort of thing: sustained selling pressure, macroeconomic pressure, weak institutional demand. Now, they've gone through what to watch for, the same stuff in summary. Now, they didn't give me a percentage. Now, Deepseek has been really resistant to giving me a percentage likelihood because I asked it again. It didn't give me any percentage. It says Bitcoin has fallen 30%. That was the only percentage I got out of it. So I've really had to struggle with DeepSeek to get it to give me a percentage. I keep asking it the same. This is actually an interesting, but interesting here is, look, DeepSeek is the most cautious. This believes that there's a 20% chance of a bull market retrace scenario and 80% probability that we're in a bear market. So with the argument that part of the normal 4-year cycle, temporary dip, a final parabolic phase. Catalyst is persistent institutional buying. So we keep an eye on the ETFs, which we all do. And they're still selling, folks. They are still selling. So the probability of this 80% bear market, the argument is a classic bear market confirmed by a sharp 25 to 28% price drop from recent highs and broken key supports. Catalyst would be massive ETF outflows, which we're seeing, an extreme fear. So are the ETFs, are the big boys manipulating the market to make it look like a bear market, or are we actually in a bear market? Well, DeepSeek seems to think we are in that bear market by the purest definition of the field. So the fact is, folks, nobody knows for certain except people with all the money who will know what they're going to buy. So is this an ETF? Is this a big firm flush out? Is this BlackRock scaring the hell out of retail? Which, let's face it, BlackRock are not renowned for doing retail any favors at all. But that's what's happened. BlackRock are a big factor in the downturn of the crypto market at the moment, along with a few other factors. Now, the optimist would say that these are classic signs for a flush out before a big pump upwards. And the bearists, the more realists, the people would say caution, caution, don't lose everything, get out while you still can. Me, myself, well, it's not for me to tell you what I think. You probably know if you follow this channel. But nonetheless, that's what AI thinks. But the question is, what do you think? Which AI engine is the best one to assess this? Which has given you the most accurate data? And what do you think? Leave your comments and let's have a chat, my friends. Let's have a chat. And if you've enjoyed this content, then please do like and subscribe to the channel. If you want another one of my videos, you'll find them just there. But either way, my friends, stay lunatic, have fun, and make money with crypto.